Connection lost. So that's really key.
For our radio audience, we're taking a look at shares that are still down about 10% or so in after-hours trading. So, Julie, finally, quick question here to you. From an equity perspective, a 38 IPO price, a 10 handle. But from a balance sheet perspective, hoarding cash from $1 billion to now more than $6 billion in cash on that balance sheet.
I'm just going to jump in here because Visa's coming out with its numbers, and I know, Julie, you're perfectly placed for this sort of a company too, but its first quarter earnings per share coming in at $1.83 versus $1.42 year over year. So seeing growth. The adjusted earnings per share is coming in as a beat, $1.81 versus $1.70. The net revenue, $7.1 billion. The estimate had been for $6.8 billion. So a nice growth there. And the cross-border volumes at constant currency up 40%. People are traveling. Julie, Visa, is this better sentiment check on the consumer than perhaps Amex was earlier in the week?
We think so. Much more widespread and focused on the consumer, right? Whereas Amex is a certain type of very high-level consumer, right, and corporate purchaser. So Visa is a very good barometer for consumer spending in the fourth quarter, right? Now we need to look at what's happening in the first quarter because we have a much different picture right now because of Omicron, because of travel. I expect that we'll see some slowdown. MasterCard talked about growth coming off just a little bit in January compared to February in the big holiday travel season. Not in a concerning way, but a little bit of a step back with the opportunity to have some good travel numbers again by the spring and summer.
Come back with us as Caroline so gracefully brings in some of those Visa headlines as well, which I know that you're going to be sticking with us here on television to continue to break down those. Going back to Robinhood, the hoarding on the cash on the balance sheet, as you're looking at the equity market turmoil, what does that mean for the fundamentals from a credit investor standpoint?
I mean, still a solid base there, right, for them to build off of. Solid cash flow, numbers that will allow them to continue to invest in the new products that they need. The thing is, they need these new products, right? They need to get them out the door. Labor costs are going up, marketing costs are going to go up, so that base on the balance sheet is especially important. But this is going to be the year for them to deliver multiple new products, and great they have the ability to fund those, but they need to start rolling them out quickly.
Judy Shariel is going to be sticking with us, senior fintech and payments analyst for Bloomberg Intelligence, as we dissect the consumer. We also can dissect USBs remain, memory chips. It's ugly for Western Digital.
Yeah, in fact, the biggest decliner right now is actually Western Digital, not Robinhood. Those shares down 14% right now. They're coming out with earnings, and it looks like the guidance are coming in a little bit light. The adjusted EPS for the third quarter, their fiscal third quarter, is going to be 150 to 180. That's the range that the company gave. The average estimate on the street, 196. That's basically the headline here. They also have a CFO change and a few other issues here. We'll dig a little bit deeper into that, but those shares down 14% right now, Carol.
Yeah, rough on Western Digital. Hood down about 15%, but Visa going in the other direction, up about 2.4% in the after hours. All right, that's going to do it for our cross-platform coverage, our Beyond the Bell coverage on radio, on TV, on YouTube. We'll see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Let's take a check on world and national news. Nancy Lyons is standing by in D.C. Hey, Nancy.
Thanks, Tim. President Biden says he'll announce his Supreme Court nominee by the end of next month and confirms it will be a black woman. He made that declaration at the formal retirement of Justice Stephen Breyer. Biden was chair of the Senate Judiciary Committee when Breyer was nominated to the court in 1994.
But I was proud and grateful to be there at the start of this distinguished career in the Supreme Court. And I'm very proud to be here today on his announcement of his retirement.
Biden praised Breyer as a model public servant. President Biden held a conversation this afternoon with Ukraine's President Volodymyr Zelensky. No word on what the two discussed. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Messer, along with Tim Stenovic in our Interactive Brokers studio. So this is what happens when I think it was over about 4 days, $1 billion worth or so. Mr. Ackman buying a bunch of Netflix shares, and Netflix getting some support, some love.
Yeah, a little bit of love. I think some would say that it's about time for Netflix to get love. So, Bill Ackman certainly would. This is really interesting because as I was leaving the studio yesterday, I saw this tweet, Carol, that he had added to his position, or had not even had added. He hadn't been a buyer before. Here's what Bill Ackman wrote on Twitter, and that's how he made the announcement. We recently purchased more than 3.1 million shares of Netflix, which makes us a top 20 holder. I have long admired Reed Hastings and the remarkable company he and his team have built. We are delighted that the market has presented us with this opportunity. We are, of course, talking about Bill Ackman of Pershing Square Capital Management. He's now among Netflix's top 20 shareholders. Netflix jumping as a result.
Yeah, absolutely. In fact, if we were going to do gainers in the Beyond the Bell,
That was one of yours, right?
That was definitely one of mine. It was top in the NASDAQ 100, stock up 7.5% in today's session. Mind you, it is way off of the lows. It's down about 36% so far this year. And we know the headlines when it reported earnings, right? Concerns about some of the outlook. But nonetheless, you know, Bill Ackman's seeing an opportunity and buying into the name.
Yeah, it's pretty amazing if you look at the chart of Netflix, because it's right now, Carol, at a level that it was last at, more than a year ago at this point. I mean, obviously earlier this week it was at this level, but where it's trading right now at $386 a share, that's basically like you taking a time machine all the way back to April of 2020. Think about what was happening in April of 2020. That was like people were, I think watching Tiger King at that point.
Everybody was.
Yeah.
Like, I'm going to take you back. Back in 2018, the stock gained almost 40%. 2017, it was up 55%. 2019, almost 21%. In 2020, 67% higher, and another 11% gain last year. So it has had a tremendous run.
It really has. But you know what?
Right.
That run came to a screeching halt on Thursday when the company reported earnings. But Bill Ackman seeing an opportunity to get in at a reasonable valuation.
Yep, definitely giving it some love today. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are on Apple Watch, waiting for those numbers to break on the Bloomberg Professional Service. Still waiting for the numbers. Yes, we'll be all over them as they cross the Bloomberg Professional Service today. Apple shares down 0.3%. Our live blog, though, up and running, and we are awaiting the latest numbers out of Apple. Meanwhile, we heard from Visa moments ago, up after hours by about 2.5%, charging higher after hours. It reported adjusted EPS for the first quarter that did beat the average analyst estimate. Robinhood Markets heading the other way. Fourth quarter revenue that fell short of Wall Street estimates as equities trading declined. Again, we've got Robinhood down now by just about 10%. We had a sizable advance at 1 point for the U.S. stock market today. The S&P day after the Fed up by 2%, almost 2%, ended with a loss on the S&P, down 0.5%. The Dow lower by 7 points, down less than 0.1%. NASDAQ down 189 today, down by 1.4%. 10-year yield 1.81%. Gold down 1.3%, $17.95 the ounce. And West Texas Intermediate crude oil down 0.4%. 87.04 a barrel. Again, we're on Apple Watch. I'm Charlie Pellet. That is a Bloomberg Business Flash.
We are indeed on Apple Watch. In the meantime, we also certainly have on our radar.
Speaking of Apple.
Thank you. Thank you for that assist there.
Yeah, no
I needed
problem.
that help. We talk a lot about the influence, right, of America's largest tech companies that they have on the stock market. Apple, no doubt, depending on its results, really will have a lot of influence on the sentiment and psyche within the tech sector. Some, though, feel like they also have a lot of sway over members of Congress as well. And we are talking about big tech.
Yeah, we are. We're talking to Josh Green, national correspondent for Bloomberg Business Week. He joins us on the phone from Washington, D.C. In the new issue of Bloomberg Business Week that's available now on newsstands, on Bloomberg, and at Bloomberg.com/businessweek, Josh writes about Congress's big tech stock sales while they're making regulation awkward. Josh, it's always great to chat with you. I got to tell you, I had no idea that Nancy Pelosi's husband has as much as $25.5 million just in Apple stock. Wow.
Yeah, it's crazy. I mean, one of the things that sort of launched this piece was, there's just a lot of talk in Washington, a lot of joking among congressional staffers that if somebody wanted to start a hedge fund and open an ETF, what they ought to do is just mimic Nancy Pelosi's trade to make some of the money. Wow. I went through painstakingly congressional disclosure filings to look at how many members of Congress own the 4 big tech stocks that I wrote about. And I chose the 4, Apple, Amazon, Google Alphabet, and Facebook Meta, because they're the ones targeted by an antitrust bill that's moving through the Senate that unlike most things in Washington, actually has some bipartisan support. And yeah, I mean, the numbers that come out that we show in the new issues of Business Week are just shocking. I mean, we found 95 congressmen and senators who collectively own tens of millions, if not over $100 million of these 4 tech stocks alone. And of course, these are the same members of Congress that are ultimately going to be deciding these companies' regulatory fate when it comes time to vote on this bill.
Do you think it could possibly sway them in any way, Josh?
Cheryl, I said something in your tone.
I have to say, we talk about this so much in the newsroom, and it's been something that our team, we've really been thinking a lot about. Like, I am amazed that there isn't already something in terms of a law or on the books already that says, no, of course you can't own them.
It's absolutely insane. And I think as I write in the piece, I did a little research, a little reporting on like how did we get to this state? And one of the answers I got from people in Congress is that, look, it's actually kind of hard. Congress doesn't make it easy to find this stuff. They do have to publish disclosure filings, but like some of them are handwritten, like in pen. You know what I mean? It's not the kind of thing that can easily be searched for and aggregated. And then it's also difficult to figure out from legislation moving through Congress, like to be able to connect the dots. Well, Senator so-and-so owns this company and this bill is going to affect it. What makes the current moment so interesting is that there's this antitrust bill going through the Senate that really only affects 4 big companies that are all hot tech stocks. And so it was this rare moment of convergence where it was unusually easy to see. And the fact that the ownership is so extreme and that the public has begun to notice this. There's a senator from North Carolina, Richard Burr, who was just investigated by the SEC. They're not pressing charges. but for his ample stock trading. David Perdue is a Georgia senator who lost his reelection last November in part because of stock trades and the impression that he was doing insider trading. So I think the public is finally kind of cottoning on to this realization that, oh my gosh, there's so much money at stake here. Should they really be allowed to do this? I think most people, if you look at polls, say the answer is no.
Well, it's so interesting, Josh, and I remember Senator Kelly Loeffler falling under similar criticism in 2020 about her stock trades, former senator. I think, everyone's always surprised when I tell them that business journalists, if you work for, a respectable media outlet, you are not allowed to hold individual stock in companies that you follow.
Like no-brainer.
Like it's a no-brainer because there could be an appearance of a conflict of interest. And I'm including myself in that category, right? So it's like, it's just, I think, mind-blowing to a lot of people that the people who are making the rules can also benefit because of information that they know about what they're going to do. Not just that, though, but it's about the regulatory part of this, right? So, okay, take us now to where we are, because the tone has shifted a little, even coming from Nancy Pelosi, who has said recently that, it's a free market, that she doesn't think that she should not be allowed to trade stocks. What has she said lately?
Well, so she said this just a couple of days ago. Reporters went to her and said, "Hey, should this really be allowed?" And you just have ungodly amounts of money in these stocks that you're regulating. And she kind of haughtily dismissed the idea. Said, "Hey, it's a free country. I should be able to do this." I mean, since then, there's been all sorts of criticism, not just of Pelosi, about members of Congress in generally. But it's just such an easy. It's so easy for the public to see the conflict of interest, and it really did draw criticism. Pelosi herself was criticized quite vocally by former President Trump, who said, "Look, enormous conflict of interest here." That's coming from a guy who knows a thing or two about conflict of interest. I think Pelosi decided that it was just too. It was just impossible to sort of keep up that guise. And so last week she came out and said, "Well, look, if Congress decides they want to pass rules, that's up to them." And in speaking to kind of good government types who are usually very down on this kind of thing, there really is some optimism that these rules are finally going to pass, that there may finally be some kind of a ban on congressional stock trading that would just ratchet it back to like what we at Bloomberg are allowed to do, right? We can invest our 401ks in index funds. No reason that members of Congress shouldn't have to do that too.
Exactly.
And so this may be the issue that really shines the spotlight on this tech bill moving through Congress.
It's just a vicious cycle. The big tech, and they've gotten really smart about lobbying and, whatever support that they provide to candidates, and their sensitivity to that, but then they own the shares too. It's just mind-boggling that there isn't already something on the books. Josh Green, thank you so much. National correspondent, Bloomberg Businessweek, on the phone from Washington, D.C. His story in the upcoming issue of the magazine. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, just crossing the Bloomberg terminal. Apple earnings, they are out. Here's one of the big headlines. First quarter revenue, it's a beat, folks. $123.95 billion. The estimate out there is $119.05 billion. And Tim, that stock is up now about 1.8% in the after hours. Let's watch the overall market indices, those futures in the after hours, and see what kind of support they might get out of these Apple
Yeah, you mentioned the
results.
important one, beaten every segment except for iPad revenue. That was a miss there. Apple saying there's a very strong customer response to recent new products, record high for installed base of active devices. The company maintaining target reaching net cash neutral over time. I know Charlie Pellet is watching these numbers closely along with the broader markets. Give us an update, Charlie.
Indeed, right now we have got Apple shares after hours up by 1.45% as we take a bite out of those Apple earnings. As you mentioned, the first quarter revenue number, $123.95 billion. Estimates were for $119.05 billion. And Tim, do want to repeat that other headline there. Apple saying it sees very strong customer response to recent new products. So again, Apple shares after hours up now by 1.43%. Yes, we're on it. We've got more on Apple coming up for you in just a moment right here on Bloomberg. Visa out with adjusted EPS for the first quarter that did beat the average analyst estimate. Robinhood Markets heading the other direction reported fourth quarter revenue that fell short of street estimates as equities trading declined. Stock after hours, Robinhood by down just about 10%. Roller coaster ride on Wall Street today. Very choppy session. The Dow, the S&P, NASDAQ all lower as investors digest yesterday's Fed decision. S&P down 23, a drop there of 0.5%. The Dow down 7, down less than 0.1%. NASDAQ down 189, down by just about 1.4%. 10-year yield 1.80%. Now, what about speculation involving the number of Fed rate increases this year? Maggie Patel is senior portfolio manager at Allspring Global Investments.
To see the Fed aggressively tighten 5 times this year, I think is completely out of the question from the MO that the Fed has been using, where they're just as focused on the economy and on unemployment and not as focused as maybe market participants on slamming down inflation.
Again, Apple shares up now by 2.6% after hours. Apple, again, revenue beating estimates, 123.95 estimates there, 119.05. More on Apple coming up in just a moment. Briefly, again, recapping, 10-year yield, 1.80%. Gold down 1.3%. West Texas Intermediate crude today down 0.2%. 87.17 a barrel. Gold, by the way, 17.96 the ounce. I'm Charlie Pellet. We're all over Apple. That's a Bloomberg Business Flash.
We are indeed. And the stock now up about 2.6% here in the after hours. Let's see what John Ehrlichman has to say about those Apple results. He's co-host of Bloomberg Markets on Bloomberg Television with our own Matt Miller, correspondent for CTV National News. John with us on the phone from Toronto. Looking like a pretty positive report here, John.
Boy, is it ever, Carol. And I was thinking back to the last few quarters of results from this company. There's kind of a mix over that period of sometimes having really strong, really a blowout, and then others that fall a little bit shy. But I think the takeaway here is just this company is just a beast. I mean, it was a year ago when they had their first $100 billion quarter. And now this year, coming into these numbers, you guys talked about it, people expected in 1 year they would get up to 119 billion. They ended up having several billion more than that. I think the key here is that last quarter, the fourth quarter of their fiscal year, they were dealing with some big supply chain issues, Carol. And we talked about billions of dollars of potential business that they lost out on. So maybe they were able to get more of that. And it's funny, we've talked to a lot of analysts ahead of these numbers. I know everybody in earnings season is dealing with the supply chain headaches. The thing is, nobody wants to cross Apple. They are the biggest, they have the largest reach, and maybe Apple got things more to their liking this time around. So we'll see what happens, obviously, in the rest of the after-hour session.
Yeah, hey, John, let's go into some of these numbers here, and I think it's worth repeating. $123.95 billion in first quarter revenue. $124 billion in one quarter after the first time a year ago reaching a $100 billion quarter. These are just mind-blowing figures. Okay, so wearables for the first quarter. Remember, Apple does its fiscal year differently than a calendar year. Home and accessories, that was a beat. Services revenue, another beat. iPad revenue was the only miss when you're looking at these numbers. But it was barely a miss. 7.25 is what they reported. $8 billion is what they were is what analysts wanted to see. Does that even matter?
Well, I think at the end of the day, it's like I don't want to diminish the stock story. The truth of the matter is it's still going to take even more, as crazy as it is to say that, to ultimately impress the market the day after, like tomorrow trading. If you think about the last year, on average, the stocks may be flat to more negative, even when you have strong numbers. I think what matters is that when they are firing on all cylinders, Tim, as they are with a report like this, it allows us to think even bigger about what's coming. Like outside of just being a cash machine, and look, this is a massive Warren Buffett holding. It's one of the most widely held stocks out there. The ability to satisfy on the top line and then, have more money to play with. I think what's going to be really interesting, and you talked about some of the other device sales, is that we've got that next generation VR and AR as the next big thing. So any of the analysts who have had pretty optimistic outlooks for the business can point to a quarter like this and say things are coming along, and then all the upside part of it would be that they have potentially some other businesses out there. And I think that the services business, you mentioned that's always important. I guess there's always the possibility that business changes. Maybe they've got to change their app store fees. Maybe I don't know, there's an anti-competitive push on Apple TV and music and just having all of this collection of services. But for now, this is the law of large numbers, and Apple can cash in, whether it's iPhones or services or just in dealing with the supply chain. Let's not forget, that's the bread and butter of Tim Cook.
Well, and I was thinking about what Anurag Rana of our BI team said earlier is the big question for Tim Cook is, can you get more iPhones shipped this current quarter? Because if not, it's all about the iPhone, right? Still, in a large way, that people will put off buying until the next product upgrade, and that would be impactful for Apple. Just got about 40 seconds, John.
Yeah, they are toggling well. Based on these quarterly numbers, Carol, they have done a good job at convincing enough people right now to buy what's on the market and maybe tease ahead to what's going. I'll tell you that the street expects Apple to, in this fiscal year, sell about 240 million iPhones, which is basically like 1.5 million every, or a million every 1.5 days. They sold 1 million in their first year, so they seem to be doing just fine on that front.
Yeah, exactly. John, thank you so much. Really appreciate it. John Ehrlichman, he's co-host of Bloomberg Markets right here on Bloomberg TV. He's also correspondent for CTV National News, joining us on the phone from Toronto. And again, that key headline, first quarter revenue, it's a beat, folks, $123.95 billion. But as we said, I think everything, what was it, but the iPad?
Yeah, it was a miss there, and it was a miss in Japan as well, in terms of every region was up year over year except for Japan.
And supply chain, it seems to be working it through. Stocks up in the after hours. Let's get back to World and National News. Nancy Lyons, take it away.
Thanks, Carol. U.S. Supreme Court Justice Stephen Breyer is stepping down from the bench. Breyer is expected to serve out the remainder of his term and will formally retire once his successor is confirmed. President Biden says he has not yet made a decision on who he'll nominate for the vacancy, but he did make one commitment today.
The person I will nominate will be someone with extraordinary qualifications, character, experience, and integrity. And that person will be the first black woman ever nominated to the United States Supreme Court.
Biden says he'll announce his choice by the end of February. Leading candidates include U.S. Circuit Judge Ketanji Brown Jackson, U.S. District Judge Michelle Childs, and California Supreme Court Justice Leandra Kruger. A day after the U.S. formally responded to Moscow's demands for Ukraine to remain out of NATO, no word yet from Russia, but Undersecretary of State for Political Affairs Victoria Nuland is reiterating diplomacy is the path being sought by the U.S.
We hope Moscow will study what we have offered them and come back to the table.
Nuland says they will exhaust every opportunity to resolve the issues through diplomacy. A new study indicates gas stoves are contributing more to global warming than previously thought. Researchers tested emissions around stoves in homes and found even when not being used, the stoves leak methane into the air, about the same amount of greenhouse gases that come from 500,000 cars. The industry says methane emissions overall are down 69% since 1990. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, folks, watching Apple here in the after hours. We're watching our live blog as well. Let me just first go to the stock reaction because we know Apple certainly has the potential to move the markets. It's up more than $6, up about 3.8% in the after hours. That's a pretty big kick to the upside.
Yeah, it really is. So let's go over some numbers here. Impressive numbers, especially given supply constraints. The revenue figures beating estimates, coming in above $120 billion for the most recent quarter. Estimates were for $129 billion. Products revenue, Carol, beating estimates, coming in $104.43 billion. Estimates were for $99.3. Look, and that revenue figure, the biggest quarter Apple's ever had, $123.95 billion.
Yeah, it's
massive.
It's massive. I mean, whenever we're dealing with Apple, the numbers are always large and kind of mind-blowing. But to see that, as our live blog is noting on these Apple results, Apple posted a record quarterly sales that sailed past Wall Street estimates, and it really is a sign it was able to work through a supply chain crunch fueled by the pandemic and chip shortages. So that is really, really significant. But we heard from our John Ehrlichman talking about that, Apple's huge, and so it has leverage with suppliers, I would say, it's safe to say, right? So it's able to those suppliers probably protect that Apple supply chain more than maybe some smaller players.
And you can't forget, Tim Cook is a master when it comes to supply chains. That's what he focused on earlier in his career. He's a logistics guy, right? He's a logistics guy, exactly. One area of relative weakness, though, we pointed out earlier, it's worth repeating, the iPad. It was a darling during the pandemic, Ian King writes on our live blog, as everyone switched to living life through a screen. Apple has said that it's been impacted by shortages, but so have other areas of its product range, and they still did better than estimates. So this is one area of weakness, and I think analysts will be asking about that.
We'll watch the major equity averages. Keep in mind, Apple is 12% of the NASDAQ 100, 12% of the NASDAQ overall, and about 7% of the S&P 500. So there will be significant impact depending on how the stock trades in the after hours, but really into that Friday trade. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Apple shares higher after hours after posting record quarterly sales that sailed past Wall Street estimates. We had Apple shares rallying after hours, as I mentioned there. It was able to work through a supply chain crunch that was fueled by the pandemic and chip shortages. Apple sales up 11% to $123.9 billion in its fiscal first quarter. Analysts were predicting $119.1 billion. Robinhood market shares now lower by 9.5% after hours. It reported fourth quarter revenue that fell short of Wall Street estimates. This headline from the Bloomberg Professional Service: Home Depot has named Ted Decker as CEO, effective March 1st of this year. Stocks lower today, giving up another sizable advance. At one point, the S&P 500 index was up by almost 2%. End of the day down 0.5%, lower by 23 points. The Dow down 7, down less than 0.1%. Nasdaq down 189, a drop of 1.4%. 10-year up 17.30 seconds, 10-year yield 1.80%. Gold down 1.2%, 17.96 the ounce. West Texas Intermediate crude 87.32 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It's been a whirlwind day, a whirlwind week, a whirlwind year already. And I'm thinking about, for those of you who are just thinking about getting out into the world, this next guest can maybe talk to us a little bit about revenge spending on steroids.
Carol, have you ordered your super yacht?
I have not.
No, neither have I. We're talking about Jonathan Beckett. He's CEO of Burgess Yachts. It's based in the UK, but Jonathan joins us on the phone from New York City today. How are you, Jonathan?
I'm very well, thank you, and it's great to be back in the city. I'm normally here about a week a month, and for 22 months I didn't come. So I've been back 3 times in the last 2 months, and it's great to be back.
Welcome back. Hey, before we get into what you see for 2022, just give us an update about what the industry looked like in 2021, because it was a banner year for the industry.
Yeah, I mean, as we went into COVID, I think everybody was battening down the hatches and, expecting the worst, planning for the worst and hoping for the best. And, from September or October 2020 and all the way through 2021, we hit record highs, and it's been the most extraordinary period of time for our industry.
I've talked to people in the boat world, and they have said it has been off the charts. Boats of all sizes and prices of just people in the pandemic, and I think it's also the wealth creation, certainly in certain substrata, if you will, or strata of our society. Joff, tell us about who's been buying, across the world, and what kind of yachts are we talking about?
Well, in our market, it's really across the board, from Australia and New Zealand, through Russia, Asia, America, Europe. And I think, this is the first time that many of our clients have actually felt vulnerability, you really experienced vulnerability. Before, I think, a lot of our clients felt bulletproof and very secure with their business and the environment and the economy. And for the first time, they were sort of almost helpless and felt very vulnerable. And as you say, there's been a lot of wealth creation. And so why put off for 5 years' time or 10 years' time when you could be doing it today and enjoying it with your family today? And I think that's had a big play in our market.
Well, what's a typical purchase? Is there a typical purchase you could kind of lay out for us?
I think the marine industry across the board has done exceptionally well in the last 18 months. But, the typical purchase in our market is probably an average of around $50 million. And that market, there's been a sort of feeding frenzy, and prices are sensible. They're not inflated, but they're good prices. There are no cheap boats around.
Yeah. Well, what does a $50 million yacht look like? What does it get you?
What does a $50 million yacht look like? It's probably, it's around 60 meters, 200 feet. It will accommodate 12 to 14 guests, have a crew of 16 to 18, and transatlantic range. It's a world cruiser and full of luxury. But our market goes from $10 million up to $600 million. The very heady heights. It's an absolutely extraordinary world.
Yeah, and I'm assuming it's a lot of motor yachts, but I know you have sailing, which is my favorite always, and it's fun to look at. Who's buying, though? Is it, we used to say on some of this stuff and some of this really high-end luxury products, if you will, that it was a lot of tech, entrepreneurs and so on and so forth. Who's doing the buying, though, Joff?
Who's doing the buying? Our market is, the American market is very, very important to us. Mm-hmm. It's probably 30 to 35% of the world market. And there are certainly a number of tech, young tech entrepreneurs. But, the market is very traditional, and, people in finance, in property, in, car dealerships, mm-hmm. manufacturing. A lot of our clients are involved in businesses that produce a lot of units that everybody wants. And, I could be talking about cardboard boxes or shampoo or toothpaste or...
Right.
Yeah.
We all use a lot of that stuff, and that makes a lot of people wealthy. Yeah. Hey, you also do a lot of chartering. Tell us about that side of the business as well.
Well, chartering was very difficult in 2020, obviously.
Yep.
And a lot of charters were either cancelled or pushed into 2021. 2021 was almost our best year ever. It wasn't quite our best year ever, but 2019 was our best year. And I think 2022 will be a record year for yacht charter. And already, we've got limited availability in the peak season. So, everybody wants to go out and enjoy themselves. They have the finance to do it. And, it should be a very good year for the yacht charter business. And anyone listening who wants to charter a yacht, throughout the year, then it's time to book up, because there is a shortage. There's going to be a shortage of supply.
Are you concerned at all about market volatility and the way that it may affect the confidence of somebody who's about to shell out $50 million or more for a yacht?
I mean, absolutely. And, our market relies on stable world economy and stable political environment. And, anything that is a jitter, people sort of pull back and they're nervous about it. But right now, I think we are, obviously the markets have been down the last couple of days, but, not dramatically down. And
nobody's pulled a deal because of the market volatility, just quickly?
No.
Okay. No. All right, well.
Yeah.
Well, I'm just going to say, go through your website. It's like going on a mini vacation, especially when it comes to the charter side. Come back soon, Joff. Come back to New York, and hopefully we can have you in studio next time. That's Joff Beckett, the CEO of Burgess Yachts, based in the UK, in New York City.
Carol, if you have to click on the price and ask how much it is, remember, you can't afford it, okay?
I know, our mothers, right? Our parents have both said that. If you have to ask, you can't afford it. Coming up next is Joe Matthew. He is host of Sound On. He's in our studio. What's on tap today?
We're going to start with this Supreme Court situation. We actually heard from the president today. Remember last night, it was like, well, hypothetically, we're not sure what we would do. Like, come on, can we come out with it? They're on the same page now. We heard from Stephen Breyer, really touching moment. The best Supreme Court reporter in the country joins us, our own Greg Storr, coming right up.
I love Greg Storr. All right, lots to go. You ready to buy a yacht?
Yeah, I'm ready.
Which one?
I don't know. Maybe, less than $50 million.
Yeah?
Yeah.
Cash down?
Yeah, totally.
All?
Of course.
All cash? All right, everybody. That's going to do it for the Thursday edition. Friday just around the corner. We're going to keep an eye on Apple into that Friday trade. Have a safe evening. This is Bloomberg.